Coming up on the 3-minute mark, let's just do a quick recap of the week. When we saw some volatility early in the week here. This is the Dow for the last 5 trading sessions. That sell-off on Monday, we came back. Remember this wild turnaround day. We were up 100 points for a time. We were down negative for a time. Then we finished up 100 points, sideways for the most part. And we're going to finish the week out with about almost a 1% gain on the Dow Jones Industrial Average as we go out here just off those all-time highs that were set on Wednesday. The 10-year note, equally volatile this week with all the economic data we had out. The Fed meeting was on Wednesday, and the yield has been going lower. We started the week, we got as high as 2.72% this week, and we're going out below 2.6%. 2.59% is the yield on the 10-year note right now. And look at this, guys. The best performing sector in the S&P 500 this week, the telecom play. This is a classic defensive play in the market, pays dividends. Everybody likes it for that reason. It's going out with a gain of 2.7%. But look at this, the worst performing sector. There are 10 sectors in the S&P 500. The worst performing sector, you ready for this? The utilities. Isn't that interesting? And much of that the result of a sell-off just today. And we're going out with a decline for the week on the utilities of 1.3%. What do you make of that? Isn't that interesting?
It is very interesting, Mark and Bill. The utilities, there's a big merger going on, as you know, and that has caused one of the big leaders this year to sell off a little bit. So that's one reason. Also, interest rates, they usually go down when interest rates are going up, and interest rates are going down. I find it very disconcerting that the 10-year is below 260. Finally, Bill, the telecom sector, 60% of it is telecom equipment suppliers.
That's right.
Not your phone
service providers.
Right.
And that's basically China is about to upgrade their networks, and everybody's hoping that we'll be able to get past spying and all the other things and get some sales over there.
Yeah, that's right. And don't forget CapEx spending, right, as well, whether it's technology.
The money companies spend on factories and equipment and things like that.
That's right. You'll see a bounce back in the utilities segment. I think so. I don't think that's going to continue to sell off. I see that and telecommunications continuing to go higher.
But then what do we make, very quickly, of why the yield on the 10-year, for example, is still going lower? That would suggest that bond market traders expect a slower economy, not a faster-growing economy.
The three of the 4 biggest economies in the world, China, Japan, and Europe, are slow, very slow, and inflation is low. Secondly, the Fed cannot let interest rates rise too quickly because our debt is so big.
Well, they certainly are not
and it
letting
will
that
dwarf
happen.
the budget.
None of the central banks will let interest rates go higher. That's a fact.
That for sure is what's happening right now. Thank you both.
Thank you.